Good morning, good morning, good morning, everyone. Welcome back to Trade Love Academy weekly midweek move session. And we're going to learn all about identifying MES futures setups and key market structure and levels. Today, we have a special guest, my son. This is Izzy. He's 14 years old. He's been learning about trading with me. Well, I'm going to start getting him, into the charts, learning how to trade. What type of trading do you like, Iz? Or what are you interested in? Pocket options?
Yeah.
Yeah, he likes binary. He used to help me out with that. He didn't know what he was doing, but I used to be like, look at this chart. Tell me when this candle is, reaching this level or anything like that. So pretty cool. We got someone here with us going over our charts. He's going to be my little helper. So you guys welcome Izzy. Good morning. Alrighty, so let me go ahead and share my screen and we'll get to talking about candlestick patterns or key levels. You guys remember we had a poll in the Trade Love chat. So I need you guys to, and the whole thing, it was a tie between candlestick patterns and how to identify key levels in the market. So the first one to drop in the chat and break the tie, that's what we'll be studying today. Let me pull up all of my screens and give everyone a chance to get in. Let's see here. Okay. Okay, hey Ty. Key levels. Alrighty, Ty has chosen key levels. That's going to be our topic for today. So great. Let's go ahead and just take a quick look at the market. Look at news, see what we have on the schedule for today, and then we'll hop straight into our lesson. We'll have a short class. I'll let you guys get into the markets. It's midweek. We're gonna have so much fun. Who's ready? If you're ready to get started, drop some hearts in the chat. Don't forget to like, don't forget to subscribe, and we are gonna start getting into our market structure. Okay, so perfect. Let me bring up my charts. You guys pull up your charts. Let's see here. So candlestick patterns lost. All right, so we are looking at FinViz. FinViz gives us a visual of what the market is looking like so far. Oh, look, Kelly's there. That's Kelly. Okay, so let me go ahead and drop this into the chat here so that you guys have this link. Alrighty, so this is a visual snapshot at S&P 500. What are we looking like? What's the bias looking like today? Is if you had to look at, so this is a so the S&P 500, that's what we trade. It's a index of 500 shares, and these are in stock. 500 different stocks. These are different stocks. So Microsoft, Apple, Amazon, Tesla. And they let you know if it's red, that means that something is selling. If something's green, that means it's buying. But overall, this is a snapshot of that indice. So does this look overall red or green? I know it's mixed, but what are you seeing more? Green, looking a little bit more green. Okay. Ty say he already looks like he's a professional. What's your favorite strategy for binary? They're trying to ask you that. What? He's still learning. We're just gonna go. I'm gonna have him just learning. Because I found a trading group here. It's like 5 minutes away, and that's what they're learning about is binary. I'm like, I did binary years and years and years ago, but I think it will help him to basically just identify trend and stay with the trend, buying or selling. So I think, and then just it, being a minute or 5 minutes, I think that would hold his attention, more than staying in a trade for hours, getting back in. So I'm excited too. He's been asking me for so long, and I was just so against pocket options because you guys know how they're doing. To me, that's more gambling than trading. They have it's like a big game. So, you know, but we can learn, we can learn, we can learn. Alrighty, so you are of the opinion that this market is going to be green today. Alrighty, let's take a look at what news is coming out. See if we have any high impact news. So this is called Forex Factory. We have to go to Forex Factory or Econo Day or whatever website that you use to get your news to check to see if there's any high impact news. High impact news is going to be indicated by this red folder here. It will tell us at the time. So at 2 p.m., we have FOMC meeting minutes for the USD currency. You guys know what that means. So it's a detailed record of FOMC's most recent meeting, providing in-depth insights into the economic and financial conditions that influence their vote on where to set interest rates. So this is a very important, so we don't trade during this time. Anytime you see a red folder and you see whatever time is over here, we're going to give the market 10 minutes before this time, 10 minutes out at least. I would say 15 and 15. So at 1:45, you're out of that trade until 2:15. Let that high impact news, take the market out of structure, let all those orders come in, and then you get back into the market. But we won't be trading around 2 p.m. anyways. Oh, sure. I'll drop the group info. It's a in-person group. So it's cool. We meet up at like a little diner. I was just at the diner in the area and I saw a note and it was like traders meet up on Tuesdays at 8:30. I was like, what? So we didn't go yesterday because we went to Cave Springs. We were snorkeling. Oh my gosh, that was so fun. We're exhausted. But the week before I went and it was awesome. So love to get some face-to-face interaction with traders. Okay, so you guys, let's go ahead and let's go ahead and take a look at our MES futures. Let's take a look at what the market is telling us. Let's see if we have any structure in the market, and then we'll get into our lesson. Okay. Alrighty, so this was my markup from the other day. I dropped it in the chat. My markup did not go, my analysis did not go as planned. We had some headline news came out, and so it broke market structure. And looking for a buy, we had that cross. We were going into a buy from this area, and boom, price just completely shot through this gap fill area. This was our S0 for our EMAs. Okay, let's go on the 15-minute because I did this analysis on the 15-minute time frame. Put my stuff together. Then we'll go into our how to identify key levels in the market. Where's my pen? Oh, okay. Okay, so we had this buy cross. We were entering the market here at this buy. And, we were in, and then boom, we had a cross, for this sell. The market sold, shot through this 50-61-8 Fibonacci pullback area. It shot through our S1, S0 pivotal zones. That's where, we would have found that structure. These are all areas that we were looking for the market to buy. We were looking for the market to come back to this area to fill this gap. Let me just, because there was this gap here from the open, from Sunday open here. So the market did do that. Okay. Then we had our cross here. We sold. We had another cross. We had a huge sell at this point. And this was, on Monday. Tuesday we come along. Monday we had another cross at night for this buy. But as we can see, so this was our previous area of kind of support here. The market's just been bouncing around in this area here. So we also had this high. Let's go ahead and remark up our charts. Add some more information to our charts. Let's see here. Are you guys marking up your charts? Throw some threes in the chat if you're marking up your charts with me. so that we can, identify this structure, see what's going on. And we're going to be talking about key levels here and how to identify them. But right now, we are just doing our overall chart analysis here just to see exactly what's going on in the market. We don't want to miss a move. Okay, so let's take a look. So if you guys had to, let's go ahead and look at a naked chart really quickly here. You guys did really good with naked charts last week. So again, this is the Micro E-mini S&P 500. So ES, MES futures, or however you want to call it there. And I just think that this is such a good product to trade for small account trading, your day trading accounts. This is such a good. Sometimes NAS moves too fast, US 30 moves too fast, gold can be a big mover. We really like the motion, especially for movers with the S&P 500. Okay, so we are on the 4-hour time frame. What is our bias here? Buying or selling? What have we been doing since April? Let's see here, 2025. Buying, 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 buying. Yes. Okay, so we are in a buy. So right now we've been looking for buys in the market. We did have, let's see here. And as we can see, our chart's looking a little crazy here. But as we can see, we had our support price just came back down here to this area. I'm going to make some adjustments now that we have more information in the market. So now that's no longer a major level of support anyways. We can adjust our support box to this zone. So Izzy, when you see me marking up these charts, how does this look to you? Does it look foreign? Does it look fun? Do you think you'll be able to grasp the concept? Are there too many colors? What do you think about when you see me marking up my charts?
It's interesting. It's like, see colors down here, up here. Well, like these look like candles, and I hear y'all talking about that a lot. I don't know what this is.
That's our RSI.
I can see like the red and the buying and selling going up and down and stuff. It's interesting.
You think that this will be something
that's a little bit confusing, but
confusing a little?
As of now, just looking at it.
I think you'll be able to get it. I think you will be able to get it. We're going to I was hoping we would go through candlestick patterns today. However, we'll do that one-on-one. I will still drop our candlestick cheat sheet, and we will do that next week then. So we're not going to miss out. We'll never, there's not going to be anything that we're not going to learn. We'll just learn it at a later time. Okay, so yes, we are buying. This looks like, we had a little bit of a pullback here. No big deal. Looks like we're trying to make higher highs. As we can see, our pivotal zones, we still have room in our pivot levels. So we are at the R5. We still have time for price to continue to buy up here to this R6, R7, and R8 levels. So remember, we're going to mark these off. These are key levels. All of these pivotal zones here, these are key levels. And we'll go over that. But key level here, R6, R8. So let's go ahead and mark up our overall take profit zone according to pivotal zone. So that's going to be take profit 1. This is on the 4-hour. Remember, higher time frame. So maybe not something that's going to happen today or tomorrow, or maybe not even next week. But remember, destination. We have our destination. Okay, so 6370 looks like a TP1 on the 4-hour according to our pivotal zones. Can I do that?
Which should it be? The two topics you're talking about, the candle something or key.
Oh, see what we did.
You can make a poll for the two topics and they can go in the chat.
Oh, they did. They voted already. It was a tie. And then I said the tiebreaker is whoever comes to class first, they get to put in the chat which one out of those they get to pick. And so Ty already picked key levels, but pick a different one. All right. Okay. So let's go ahead. We have our, again, we have our TP1 zone here. Oh, I don't really like that. Let's go ahead and mark it up. So TP1 on the 4-hour time frame is 63.70. Okay. We can do the same thing. TP2 on the 4-hour is 64.10. So remember, when our levels, we have a shift there, or it tells us price, that gives us an indication that price is going to continue on to those levels. We definitely want to see price break above 63.28. So MES needs to break above 63.28, which was this high here. Okay, I'm going to erase these. These are just for our markups, just so we can see the market clearly. Okay, so we definitely, again, want to see price breaking this previous high here to continue on with this buy. So it has a couple different price points that it needs to break up above just to really show strong market structure. Okay, so we are buying. Let's see what the 1-hour is telling us. Let's see here. Let's see. Alrighty, so our 1-hour is also giving us the same buying confirmation here, that it wants to break above this level and shoot off to this price point, which is 63.08. Okay. Oh, no, tie is fine. No worry. You guys are choosing your own education. I'm down for whatever. Like I said, next week we'll do the candlestick patterns and chart patterns. We'll do the whole thing that we do where we go and look at our charts. I tell you guys to find dojis. We look at that. We look in the past and see if we can find clues to, for market structure and trend. So, alrighty. So our 1-hour, we have steadily just been making, you can see it very clearly here, higher, lower lows and lower highs. So lower low, lower high. We kind of just been bouncing around here. Our pivotal zones are showing support, a lot of support here at the 62.60 kind of level. We are at our S1, S0 zone. So we're going to take a look to see if market is going to come up here to 63.05, 63.09. So we want to see a break. So maybe at 63.90 for our 20-point move in the market. So let's see if we can get in at 62.90. We have our first take profit point is 63.04. Second take profit is 63.08. So we have a couple different take profit areas here once we get a break above. So as you can see, these wicks, buyers were unable to take price above 63.90 once. They tried again. So let's see how they, fare once they come and try to knock at this door once more. Right now we are seeing, let's take a look. And again, this is on the 4-hour time, on the 1-hour time frame. So what we're doing right here is called a top-down analysis. We go from the very top of the time frame. So we use the 4-hour, and basically think about it as if you're looking at a globe, and if we were in Georgia and we zoomed out to take a look to see exactly what the entire world was doing, how it was moving, this is what we're doing. So we're starting from a higher time frame with, more market structure. And then we go down to the lower time frames to see what's going on there.
So that's the concept of higher high, lower lows.
Higher high, low. Look at my boy. Yes, that is a concept of higher highs, lower lows. Yeah. We are looking at higher high. And do you see it? Are you seeing it now clear? This is a high. This is a low. This is a high. It's going to take some time, but if we switch over to our line charts, you can see these are called peaks and valleys. Peaks and valleys. So yes, higher highs and higher lows. But now this is, and that signifies a downtrend selling. I'm sorry.
So
higher highs and higher lows mean that's a buy trend. That's buying. We're looking at lower lows and lower highs.
So when it drops below this support thing, you have to get out of it.
So the support just shows that there's no more selling pressure or selling orders below 6260. So around this area, there's no more selling pressure down there. There's no more sells. And so buyers usually come up at the support level to buy.
So you get out of your trade if you're a seller?
I thought you said you didn't know anything about trading. Yes, if you were in a sell and it reached your support level, you would get out of your trade. That's what I got. Listen, I think he's good. You've been doing your own? Okay, great. Sometimes, boy, bring it back to all the time. Well, you get a little break now. It's summer vacation. Alrighty, so 15-minute time frame. We see that the 15-minute is over here near the R8. So when we are near the R8, we want to be careful because we may get a little pullback before continuation of the buy. Oh, are you? You're a professional? I think so. Alrighty. Okay, so we need to be careful. We're oversold here. We're near the R8. This is also in line with what we expect to happen according to market structure. So if this was an area, if this was a high, this was resistance before price, end up selling when it reached that area down to the support. Buyers brought it back up here to 62.90, around 62.90. Again, resistance, demand there. Market took it back down here, sold it back down to our 62.60 support level again. So we had a little bit of consolidation, this bounce. So now price is back up here to the 62.90 price point. Our pivot levels are showing resistance. And so we are expecting, price to shoot back down here. Let's go ahead and put on our fib from our low to our high. I want you guys to get confused with this, that order. It hasn't happened yet. That's a preemptive trade. We were going to take that trade if price breaks that level. It did not. Let's look at our pivot. Let's put a Fibonacci retracement here from our low to our high to see potentially where the market might sell down to before continuing into that buy. Okay. So as we can see here, price may go back down, has the potential. If price breaks below this low here, so if price breaks below 62.80, we're going to expect it to come down here to 62.75 or 62.70 for that pullback. And then that's where we can see if we can get into the market.
One of your viewers had a question. Is this on TradingView? I must not be typing something correctly.
What Ty? What is on TradingView? Sorry, I got lost. She'll let us know. She's at work as well. You see that? Real hustle, working and trading. Alrighty, let's get down to the 5-minute. Oh, okay. Mini futures. So it's just ES in the CME. So if you look at ES, I guess you could look at I use the E-mini because that's what I'm trading on Top Step. If you wanted to use the regular futures at Capital Com.
I'm gonna type this in chat.
Okay.
I know.
Oh no, she got no. See, she says, "Oh, I see."
Okay.
Let's see here. Okay, it's gonna be the same price. So the difference between the E-mini futures and like the regular, the regular futures there is going to be, of course, when you enter that trade, the different price fluctuations, the price should be the same. However, when you're reading the DOM and like the order flow, you're going to see a difference in those orders there for those big institutions that are trading ES and not the mini MES futures there.
All right, wait. So I have a question.
Yes.
Okay, so it's all these different Forex things on the side, right? So this number indicates what? 6,286. What does that indicate?
Okay, so these are your symbols. When we're trading Forex, that's all Australian dollar, Japanese yen, all JPY, GBP, JPY, which is the British pound, and the yen. And then this is the price on the side. So these are indices here. So yes, we're trading S&P 500 right now. S&P 500 is worth $6,287. That's that indice that I was talking about. Is a stock, basically is compiles all the 500. That's NASDAQ.
So is that dollars?
That's just how it's just its name. And that's just basically its name.
So if you trade Australian dollars, Japanese yen, this is the number right here. It'll convert to dollars.
No, that's just how much. That's how much the price. That's what the price is right now.
So it's worth $95.62.
Yes.
So why don't you guys do this
one? Why don't we do NASDAQ? Because it's $22,000. See, that's the thing. We don't make money according to if this product is buying or selling. We make money predicting price direction. So we make money if we can correctly predict if NASDAQ is buying, if it's going to go higher, or if it's selling, if it's going to go lower. You can make the same amount. So it's not really about price. Now, if you wanted to buy this type of indice for your personal, portfolio, and you were holding it long term, maybe then price would be a factor that you would, consider. But we are just, how we make money is just determining price direction, determining if it's going to buy, determining if it's going to sell, and when. So we're just predicting what price is going to do according to. That's why we have our charts. It tells us what it did in the past. And basically, we combine that with new information in the order book to try to predict what it's going to do in the future. Because basically, these are all patterns. It does the same thing every day. So that's all. You're just getting acclimated to the patterns. You don't worry about the price. You don't worry about anything like that. You just worry about, okay, is this right now going to buy or sell?
And you predict that by the candles.
And you predict it by the candles. Our indicators, which are all these little lines that you see on our chart, also help us to predict that as well. Look at you, fast learner. My baby. My baby boy. All righty. So we'll see if price comes. I'm going to set an alert, and let's go ahead and focus on our lesson for today, which is key levels in trading. All righty. I am going to drop Okay, well, let me go back to this. Alrighty. So if price breaks above this level, we'll get into our buy to continue on to, our next price point. However, it's at a oversold area. It's at a resistance level in our pivotal zone. So if price breaks below this support level, so if price breaks below 62.82, we're going to get into that sell down to 62.74, and if it keeps selling, TP2 62.20. What is this? Oh, 62.70. So we have if the market does this, we're going to do that. If the market does that, we're going to do this. So we have our positions here. I have our alerts set up. So we'll be alerted if price breaks out of this kind of box here. And we are all set up. So if you guys have to get off early, no big deal. We have our trade kind of what we're looking to do here. So if price breaks below here, once again, if price breaks below, we have 2 points that we're looking for it to go. And then that's when we will jump into our buy to continue with the trend. Remember, out of your trades at least by 1:45 today. Hopefully no one is trading after 11 p.m. So cool. All right. Okay. So are you guys ready to learn how to identify key levels in trading? If you're ready to start learning, you guys drop some threes in the chat. Don't forget to like this. Throw a thumbs up. What is it called? Like the help me with my words. Coffee. I didn't have any coffee.
What y'all say? Drop that bees in chat.
Yeah. Like, subscribe. How y'all say it?
Like, subscribe, and comment.
Like, subscribe, comment, whatever you got to do it.
Share.
And share. There we go. All right. So let's see. We are going to like and subscribe. There we go. I just couldn't get it out. Don't laugh. Sheesh. Okay. Okay. So let's see here. Okay. Alrighty, so key levels. So in trading, there are price zones, that the market reacts to by either by reversing, consolidating, or accelerating, right? And these levels they're not just lines on the chart. Let me go ahead. Let's zoom out. They're not just like lines on a chart, right? They represent areas of high interest where institutional traders, algorithms and retail traders, all of them, all alike, they are watching at these levels, right? So when you know how to find and respect your key levels, you can improve your entries and exits, right? You can reduce, your emotional trades, take all that fear, all of that emotion out of your tradings, and you can see setups develop before they happen, potentially, right? So finding your key levels in the market is very, very important. So let's see here. Alrighty, so what else? What counts as a key level? So what counts as a key level? What are you taking? Because everybody's like, this is a key level, that's a key level, this is a key level. What really counts as a key level? So I say things such as previous lows and highs on either like the daily or the weekly time frame. You can have your session open or close. So your London, your New York, your Asia, those are levels. You can have your swing high and swing lows. So what's that? Our support and resistance. We can have break of structure points be a key level. Psychological levels, our round numbers, 6200, 6300, even those 6250, those 50s, those half point, those numbers. So psychological numbers, round numbers, those can be a key level. And what's the last one? Liquidity zones. So where price grabs and fakes out traders. So those 6 things, again, previous highs and lows, session open and close, swing highs, swing lows, break of structure points, psychological numbers, and our liquidity zones. So all of those different things can be key levels in the market, right? These areas, you're not predicting them. They prepare you to make decisions with structure instead of you guessing. So it's very important. And of course, how do we identify those key levels? Looking at our patterns and things in the market, okay? So again, key levels act like magnets for price. So when you understand where price is likely to react, you stop chasing candles and you start catching your setups. So let's see here. Izzy, what would be, or let's ask the chat, what would be the first thing that you guys look at, when you open up a clean chart? What's the first thing that you look at? We're looking at a clean chart. What pops out to you? What are you looking at?
These highs and stuff.
The highs and the lows. You're just looking at where price was at the high and just looking at these little, okay, good. And that was one of the key levels that we were talking about, a candle open and closing. So that could be a nice key level. All right, so let's see here. So the markets, they don't move randomly. They move from level to level, okay? And most moves start or stall at structure. So by finding these zones, you create a roadmap so you're reacting with purpose and not panicking. Okay? So let's talk through a couple different things here. Our previous day high, I want everybody to open up their charts. Oh, thank you. Definitely. I want you guys to open up your charts. Let's look for a couple different things. Let's look for some key levels on a blank chart. Let's look for instance, our previous day high. Let's look for, what's another thing we can look for? A 15-minute low or a high, a swing low or a high. Let's look for some psychological levels just right here on this price point. Izzy, look at this chart and point to where would a round number. So do you understand what I mean by round numbers? Do you see any round numbers on this chart? So 6,300, 6,200. This is the price here on the left. There we go. So we're seeing some, okay, so we're seeing right here at 6,300, this price point. Let's do a really large horizontal line. Oh, and it brings back everything. We can see here at 6,300, we had a lot of movement. This is just on the 5-minute. Let's look at the hour. This was a new high from the past. Let's go ahead and look at something else. And we marked that. Remember, we used to mark and put lines across our charts there. So for instance, 6,100, we had a lot of movement there when we were down here at 58. So those round numbers, you guys make some lines on your charts. Let's look at what we have currently. What are we close to? Alrighty, right now we are close to 6,300 right here at this R6. Of course, this is on the 1 hour time frame. So we want to be very careful. We want to be cautious. We might want to put an alert when price reaches the 6,300 price point, because there may be an influx of buys, an influx of sells, a lot of different people are taking profits at that point, opening orders at that point. So definitely remember creating your roadmap. Okay, so let's see, previous day lows and highs. And there's an indicator I forgot that just gives you that information, which you have your low and your high from the previous day. Easiest way is to go to the daily time frame. And let's go to where we don't have any, let's go to a clean piece on the chart here. If we can find one, geez. Okay. So let's just say if we were back here on Monday, May the 12th, This was our daily candle. So this price point, 57.60, was the previous day low, right? I'm sorry, the previous day candle open. It's 57.60. Now down here where we have this wick, let me move this out here. Down here where we have this wick at 57.34, that's our that would have been the previous day low. Again, then we have our open here at 58.65, and then we have our previous day high at 58.77. So going to the daily time frame, come down here to the 1 day, and you look at the candle from the day before. Look at where the market opened, where it closed, where you have your low, and where you have your high. So look at something like this. This was on the daily. The next day, once we would have saw that price broke above the previous day's high, so once price broke above 58.76 in this scenario here, that would have been a great confirmation that we're going to continue to buy. We've broken the previous day's high. We have not gone anywhere near the previous day's low. We haven't even filled half of that candle. We opened up green, kept buying, and where we closed. So those candlesticks, those open and closes, those are very important to tell you, to help you to identify, stay on the right side of the market, give you some levels. And I'm pretty sure if we would have marked up this high here at 57.76, went down to the 15-minute time frame and looked at how price reacted there, we would see a lot of movement and a lot of orders there. Okay, so let's see here. Let's see here. So remember, you guys, if you've ever been stopped out, like out of a trade, or people call it like wicked out, just before the move went your way, that's most likely like a liquidity grab, okay? So if you ever experienced something like that, put some yeses in the chat, throw some hearts in the chat. If you've ever been a victim of a liquidity grab, market came out, took you out of your trade, and just bounced to the exactly up. Everybody's saying yes. Yes, it happens to us all. So when we can identify these levels and know that we are, near an area where there's a lot of orders there, we need to adjust our stop loss so that we're not a victim of liquidity grab. So when you know these levels here, you know that there's a lot of action going there. You either stay out the way for a little bit or wait for a break so that that doesn't happen to you. Okay, so let's take a look at, in our scenario here, previous day lows and highs. Let's look at it. So yesterday, market opened at, we had a little gap here. Sheesh. Market opened at 62.70. Let's just say, I'm just going to be basic. It closed at 62.62. Our low was 62.57. And our high is 62.88. We have not broken yet. We have not had a market structure break. MES futures has not broken our previous day high. It's close, right? Very close right now. However, once we see price break above the previous day high, what does that signal for us? Price breaks the previous high. What are we doing? It kind of rhymes. Price breaks
wait. Okay,
price breaks the previous high. We're going for a buy. He hates when I sing. I love singing. I can't sing, but everything could be a song. That's how I learned my multiplication tables. It was a song. It was like a rap song, and I learned all my tables like that. Never forgot it. Okay. Ask me. Sit up straight. Come on. Get focused.
You answered the question with your song.
See, I answered the question with the song. What did the song say?
Something. But whatever the question was, the answer was a buy.
Whatever the question was, the answer was a buy. This was, if price breaks the previous high, we're going for a
buy.
Alrighty. And if price would have came down here and broke the previous low, we got to go to the flow for a sell. Okay, look, price just broke above that area. So that's a good confirmation that we are buying. We're looking at our daily time frame. So again, key levels here just within candlestick patterns. Once we see breaks of those levels, or once we see price getting close to those levels, that gives us a good idea either to get into the market, if we're already in the market, to get out or re-enter. So alrighty, so we didn't pull back. We're breaking above this structure. Price is going above this P4. We want to be very careful because let's look at our 5-minute time frame. See if we had a pivot. See, it's still near here. We didn't get a full break just yet. That wick is not going to count as a break for me. So we didn't get this close below here. So our original entry. Let's go ahead and be fluid in the market. So I erased it, but we were looking at these price points when price broke above that level. And we had our pivotal zones here to help us to identify where we were going to exit the market. So we have our exit zones here. We had a break. Price has now officially broken the previous day's high. It's broken up this resistance here. We definitely want to see a candle close and not just a wick. So we're getting into a trade. A trade like this will be a preemptive trade, meaning that, you're just getting into it with a lower lot size, really small, really low risk there, because there is the potential that price could pull back and then continue on into that buy. So we want to be very careful, but we have our setups here. I just can't put all those little position boxes everywhere, but you guys get the drill. Alrighty, back to how to identify our key levels in our trading. So key levels, how do we mark up our key levels? Okay, so let's type it out. So marking up our key levels. Usually, we have our strategy steps that we use, but and we've done that before, but really easy here. We're going to start with a 1 hour or 4 hour time frame. We're going to mark clear highs and lows, closes, session opens. Then we're going to go to the 15-minute and the 5-minute time frame, and we're going to identify our structure breaks. And our last step, we're going to validate our areas, our levels with reactions or candlestick patterns. So let's see if we can do this. Let's see. Let me write this down here. Okay, grab my notes. Let's see. See if I can. All right, here we go. I want a clean chart. Let's go to the 1 hour. See if I don't have all this stuff in the 1 hour. Okay, here we go. Let's look a little better. Alrighty, so again, we start with the 1 hour or 4 hour time frame. Okay, we mark just like we did before, mark clear highs and lows, mark your closes, mark your session opens, go down. Now we go down to the 15-minute, 5-minute time frame. We did what we did, here. We look to see if we have any break in structure. Look to see if we have any support levels. And then we see how price reacts to those zones. Alrighty, so marking key levels, right? It's not just about drawing a million different lines. We want to make sure that we're marking areas where decisions are being made. So if we see a lot of movement there, we know that there's a lot of decision. And what do we mean by decisions being made? The big institutional traders, are they putting in a lot of orders here? Are they going to, just fake us out, get some liquidity, continue on the trend? Or do we have a big, large order that's going to come in, break our structure? What's happening at these levels? Okay. Alrighty, you guys. We have a couple more minutes. Talk to me. Let's see. How far back do you guys go when you're marking your levels? I like to go back 3 months. How far back in your charting process do you all go back? Oh, where's my mouse? All right, I'm going to go ahead and erase this as well, but I just like to have, some text on the chart on our chat just so you guys have clear steps. Hope you guys took a screenshot of that. Always get into the replay if you missed anything. Okay, so let's see. Let's go ahead. You guys give me a pair. Let's look. Give me NASDAQ, Dow, or gold. What do we want to look at? Ty says she goes back 3 months. Vivo says 3 months. Yep, I do the same. Exactly. That gives us, we don't want too much information. I know some people go back 6 months. 3 months is good enough for me. When I'm doing my first initial chart on the 4 hour, I might go back, 6 months. But then after you initially mark up your chart, as you guys can see, we don't have to do this every single day. Go back to the 4 hour. Those lines and those levels, they were level in the past. They're going to be a level again. Okay, Ty says gold. Let's just take a look at gold. Let's see if we can get our eyes acclimated. Let's go ahead and clear this chart. Take out our pivotal zones, all of those indicators that really help us. Alrighty, so let's work together. Okay, we're looking at gold right now. We're on the 1 hour time frame. Let's see, what are some key levels here? Let's mark off some key levels. We're not going, let's see here. We can go back 3 months. What are some key levels? I'm already seeing a couple key levels. And I know that, you don't see the candlesticks that clearly here, but let's go ahead and draw some horizontal lines. So key level, okay? That's our first line. Let's bring it down. So let's see, 3,500, price didn't reach that price point yet. So let's look at another key level. Let's see, 3,400. Do we see a lot of movement? A lot of decisions being made here where this was resistance. We got a fake out, continued for the sell. Faked out again here. Look, whenever we see kind of a lot of consolidation at this zone, boom, a sell again. Oh, Izzy says 3,200. Let's draw another line there.
No, never mind.
Nope. It is 3,200. This was resistance before. We had a break in structure. Again, we're just going back a couple of months. Price is making higher highs. And so for gold, this may not have been the best example, but gold has been making new higher highs. So we don't really have past data to go with too much. But look, actually, this was a very good 3,200 was a very good explanation because look, it was resistance before. We had that break. Now look, it was support. We had that break here. And then it's been used as support ever since. Okay. Let's see here. What's another thing that we can use? Our pivotal zones also help us. We don't even have to do this with our naked eye. We can throw on our pivotal zones. Instantly, our pivotal zones give us those levels. So we're using our indicator here. Let's go to the 1 hour time frame. So our indicators have all of these, our pivotal indicator has all of these levels already marked out for our charts. So, you know, S1, S0, these are levels that have been previous areas of support. So look, 32.91, this was support now. In the past, this was an area of support. We had a fake out here where price flushed below 32.91 and continued to just come back up to this zone. Again, in the past, we saw what? 32.91. We're almost close to, you know, 3,300. So, you know, we don't need to be exact. That's why we say zones, areas. So in this area, so a key level. So say now, if you have a psychological price point of 3,300 or 3,200, you might want to make a box around between 32.90, 33.10, just so that you can kind of just box in those areas and see exactly what's going on there. Okay. So already we're seeing our liquidity sweeps here. Price just, you know, sellers thinking, okay, if they don't know market structure as well as they should, they're thinking, okay, this is going to be a sell. Our market's going to just shoot through this. We're going to sell. So we come over here, we have these huge wicks to the downside, and then price just continues to buy. Huge wicks to the downside, huge engulfing candle here. Look at this sell candle. Got a lot of action going on here. So a gap, then this sell. This would have been, you know, faking people out like, okay, good. Whew. We're going on that sell. Price has been making lower lows, lower highs, and then what happens? Just a liquidity grab. Price comes down right here. Look at this candle. Look at this sweet baby. All this liquidity here from 32.87 all the way down. Price sellers were able to get this down to 32.70. And then what happened? The very next candle was a green candle, and we just started to make higher highs. So decisions were being made here. We wait to see what the market is deciding to do here, and then we make our move. So once we would have saw that the sellers were unable, look at these wicks. These wicks are really giving us a major story here. So we have this green red candle here. We have sellers able to take it down to this price point. However, the very next candle, we have a gap. So that should have been our first indication that, sellers don't really have that much control, because boom, the buyers were able to bring this baby all the way up here to 33.10, you know, up above this level. Then our very next candle was a huge engulfing red candle. But what is this telling us? The wick price, you know, sellers were able to, you know, pull it down a little bit for lower than this wick previously. Then look at this next candle here. It is a open at the same price point, and then sellers were unable. So like a lot of indecision here. You just look at what the market is telling us, and it's telling us right here that we're at a key level. We are just grabbing orders here. We're unable to, you know, we have our, again, liquidity grabs. We have our wicks down here at these lower levels, but we don't have any candlestick opens or closing there. That's just showing that the sellers are very weak. Same thing if we had a buy and we had the wicks at the on the opposite side at the top. That's going to tell us, like right here, that even though prices, you know, we're not making higher highs here. We're trying, the buyers are trying, but these wicks show us that we're not able to get any candlestick, our candlestick open or closes above these areas. We're just grabbing liquidity, and our candlestick bodies. Once we would have saw, for instance, in this level that we had a new candlestick that closed below our previous 1, 2, 3, 4, 5 hour candles, that would have been our confirmation, along with our RSI being oversold and crossing down, that we are selling. So once price gets to those key levels, you have to do a couple different things. You got to look at your candlestick patterns. You can look at your RSI to see, do we still even though it's at this level, what type of momentum are we, oversold, looking to buy? Are we overbought, looking to sell? Are we going to overbought, continue to buy, oversell, still selling? You look at your pivotal zone, see if there's any shift in those areas. Because these wicks are just showing, even though price is getting, came down to these levels, this is rejection. So buyers, if you're selling, you don't want to see that price is trying a couple different hours to get lower and lower, but you don't have any candlestick open, candlestick closes below this level. So that rejection tells us things as well. Let's see here. All right. So it's 9:03. What else do we need to do? I think we're good with key levels. Do you guys have any questions about these key levels, how to spot them, how to use them, what we can, our indicator, pivotal zones, how to use that to spot key levels, now you look at these levels here and then you scroll to the left to see exactly why is it using 3293 as a S1. Oh, you go back. Oh, okay, this was support in the past. You got to go back and see exactly why those levels are marked as they are. Okay. Oh, awesome. So just remember that key levels, they aren't about prediction. You're not trying to predict those levels. You're just trying to be prepared at those levels. So they give you structure, and structure definitely builds our confidence. So just start small, you guys. Just mark 2 or 3 key zones and watch how price kind of behaves around them. So maybe just go to the 15-minute and look at those levels there. See how price reacts when it gets to maybe the R8, so 33.60, or when it gets down here to 32.90. What does it do around those levels? What has it done in the past? Okay, so let's see. All right, so you guys are catching some value from this. If you guys are catching some value from this class, drop some hearts. Oh, awesome. Great guess. Okay, no, I have not taught any marketing strategies. No, but we do have our 10-20 cross. That's the strategy that we typically use here for in our trades. And then we use our pivotals. We use a couple indicators to help us mark our destination and our, roadmap our trades there. But long story short, the indicator that I use, the strategy that I use is a 10-20 cross with our EMAs to help me stay on the side and in market trend. And then my entries, I use a combination of candlestick patterns and our pivotal zones to help me get in and out of the market. RSI helps me to, see what the momentum currently is for that trade. Simple as that. Alrighty, let's go ahead and take a look at the trade that we set up for ES, and then I will let you all go. All right, so remember, we had our overall TP on a 4-hour time frame. We're looking for price. It's already broken our previous day high, and these highs here. Our next level that we would like to see, if it breaks above this 63.10 area, you guys know what you're doing. Price is making higher highs. You guys know how the market goes in its waves. So if it comes over here to break this area, we might see a little bit of a pullback before we see price kind of coming back up here, breaking past that high, might be pulling back. We don't see just, clear higher highs, higher lows, higher highs, higher lows. When price comes and reacts to these areas, to these levels, they may be smaller levels, if you're looking at the 1-hour time frame, and then continue to get up to that level. We may have pullbacks. We have FOMC news today at 2 p.m. So take that with a grain of salt. We know that can move the market out of structure as well. Okay. You are most welcome. Do we have any questions? Any questions before I let you guys go and the New York Open happens? Let's take a look at the 1 minute, see what's going on while you guys drop those questions in the chat. Okay. Do we have any questions? No questions? Alrighty, you guys. Thank you so much for tuning in, looking at market structure, reviewing S&P 500's E-mini, or if you're just trading the regular, whatever it is. Thank you guys for tuning in. Thanks for us going over our key levels. Oh, one last thing. I do have this website. Now, this is howtotrade.com. And this was a blog that was written, Key Levels in Trading. So this gave me some information as well. Definitely will help you all out. Ty says, do you mark up the wick and the body for the key levels? I mark up the body, not the wick. I do. Wicks are important. All wicks matter. Love wicks, but I don't mark them up. I use the candlestick open and close those bodies there. I dropped in the chat this link here so you guys can get some more information about key levels, you know, why they're important in trading. Let's see here. How to find key levels, how to use your, you know, Fibonacci retracement zones. We went over round numbers, our moving averages like our 10 and our 20, pivotal points. We went over previous days' highs or lows. We put our horizontal lines around those areas. And then, you know, there's a couple different YouTube if you guys are video watchers. So we're just learning here. We get our knowledge from wherever we can get it from. If we have any tools that help us, we have a bunch of, I'm not reinventing anything. I take my knowledge from somewhere. And this was one of the articles. Well, this was a lot of information here. So I thought that this would be great for you guys to kind of just scroll through, show your love to this blogger here, and get some more understanding on how to use key levels and their importance. And there's a whole bunch of different articles here, supply and demand. So you guys take a look at this website, How to Trade, go through their articles. I think they have a bunch of different resources, cheat sheets. They have a small trading academy, I guess, that you can go over. I think it's for Forex. All righty, let's take a look at our trade. Okay, the 1 minute time frame, we've had a pivotal shift. So this price point, 62.90, was our R8, meaning there was resistance there. That's no longer our R8. Our R8 is now 62.94. That means that price has broken structure, made higher highs, and now continuing into that buy. So we are in profit on our ES buy here. So you guys manage that. Make sure that you secure your trades for the New York Open. And happy trading. Take care, guys. See me in the chats if you guys have any questions. Spread the love. Let your friends know. Every Wednesday, same place, same time.
And don't forget to like and subscribe.
Bye-bye now. Let's see. Oh, great. Our trade.